Hi, this is Nicholas Vardy, editor of the Oxford Swing Trader, and welcome to this week's edition of Swing Trading Nick's Picks. If you never want to miss one of my swing trading videos, make sure you subscribe to this channel. If you're new to swing trading, check out my Swing Trading Explained video to learn how it works. There is a link to that video in the description below. Now let's get into this week's new swing trading recommendation. Now, the past decade has been all about the FANG stocks. Most investors have been laser focused on betting on the emergence of various technology platforms, and for good reason. After all, that's where the money's been. In stark contrast, you've probably heard very little about investing in commodities over this same period. Yet, there are good reasons to think that commodities will be the place to be over the next 5 years or so. Even as investors are obsessing over Bitcoin and the latest electrical vehicle stocks, a boom in commodities is quietly gaining steam. Now, here's why I think the boom is just beginning. Just over a year ago, the price of West Texas Intermediate crude oil went negative. Now, oil prices have rebounded sharply since then, and oil isn't the only commodity that has rebounded sharply. Iron ore, palladium, timber all hit record highs recently. Copper, the world's most important industrial metal, traded above $10,000 per metric ton for the first time since 2011. Essential agricultural commodities have also soared. Corn prices went above $7 a bushel for the first time since 2013, and soybean prices also hit an 8-year high. Thanks to the housing boom in the US and the global post-COVID-19 economic recovery, supply shortages in commodities are so severe that almost all of the commodities markets are in a deficit. And here's why I expect the prices of commodities to continue to soar in the future. First, structural demand for commodities is soaring. President Joe Biden has already pushed through a $1.9 trillion stimulus bill through Congress. He also proposed a $2.3 trillion infrastructure spending bill, which will also boost commodities markets. Second, inflation risks are clearly rising. The 1-2 punch of massive government spending and central bank easing will boost commodity consumption and weaken the US dollar. Real assets like commodities tend to thrive in inflationary environments. So how best to profit from this? My recommendation is the Invesco DB Commodity Index Tracking Fund, ticker symbol DBC, which tracks the DBIQ Optimum Yield Diversified Commodity Index. Now, this index invests in a portfolio of exchange-traded funds, which in turn invest in commodities like light sweet crude oil, natural gas, Brent crude, gold, silver, copper, soybeans, and even sugar. Now, DBC has recently pulled back from its recent high of 1897 that it reached on May 12th. Now, these kind of pullbacks within the context of a long-term uptrend is precisely the kind of pattern that we are looking for as swing traders. Let's look at the swing trade parameters for this trade. The last closing price as of this recording for DBC was 1817. The trade setup is as follows. The swing trader algorithm is fired on the channel system, the overreaction system, and the triple screen system. The ETF is also oversold on the RSI, and it exhibited a 1 SD move. Now, try not to pay more than $18.50 for this. The stop loss is set at $17.60, or about 3.1% below the previous closing price. The target price for this short-term trade is $19, or about a 4.6% gain. So the recommendation here is to buy the Invesco DB Commodity Index Tracking Fund, ticker symbol DBC, at market today, and set your stop at $17.60. As always, be patient and place a limit order to get the price you want. Intraday volatility is your friend. So there you have it, a real live Oxford Swing Trader recommendation. Now, just to be clear, I can't guarantee that all my swing trade recommendations will be winners. Some market conditions are more favorable to swing trading than others. But remember that Oxford Swing Trader recommends an average of 2 swing trades like this each week of the year. So you have plenty of opportunities, about 100 a year in fact, to generate quick gains using swing trading strategies. And for my paid subscribers, I also always offer an option recommendation along with each pick. These option recommendations have the potential to really turbocharge your returns. Again, be sure to subscribe to this channel so you don't miss my next edition of Swing Trading Nick's Picks. And if you want even more trades like these, then I urge you to check out a conversation I had with Russell B., a happy subscriber to Oxford Swing Trader, at the link in the description below. Or you can call our sales team at 888-570-9830 to learn more. Stay tuned for my next edition of Swing Trading Nick's Picks 2 weeks from today. Thanks for watching.